Welcome to our channel. Today, we're diving into some exciting changes in the mortgage industry that could impact you. You will find an example of what one building society is doing now. Perhaps your building society also has the same options. Let's get started and stay to the end for more exciting news. Hello everyone, did you know people in their 90s are the new 70s? That's the news according to many professionals in the medical field. It's been stated by one prominent doctor that it's not about your genes, it's more about how you live your life. With that fact, I think you'll like what I have to share with you today. Keep watching until the end to hear some extra good news. Ever felt like the rules of the home ownership game are always changing? Well, yes, it's true in the world of mortgages. They really are, and it's big news for homeowners and retirees. Today, we have an example of how one building society alone is changing the game in the mortgage market. Before we go any further, the following information is to inform and maybe encourage you to investigate whether your own high street banks or mortgage companies can offer the same opportunity listed here. So first off, let's talk age. Previously, if you wanted a mortgage, you'd need to wrap it up by the time you hit 75. But guess what? They've pushed that limit up to 85 now. This means more flexibility for the elderly, especially those looking to move houses or release some equity in their twilight years. Why this change, you ask? It seems mortgage lenders are responding to the competition and also acknowledging a simple truth. As we mentioned earlier, people are living longer and they're staying financially active well into retirement. Many retirees are not ready to give up their working years. They often take on a part-time job to combat the loneliness of not communicating with people daily. Allowing mortgages to run until 85 years is part of a broader trend we're seeing. It's not just about helping homeowners in their later years, it's about adapting to new economic realities. Banks are getting more confident about lending to retirees, something they shied away from after the financial crisis. But here's an interesting twist. By allowing older mortgage holders to borrow more, they can pass on deposits to their children or even grandchildren. This means that indirectly, this new decision would keep house prices buoyant because it injects more money into the buying side of the market. Yes, it's a bit of a double-edged sword because higher house prices can also lock out first-time buyers. However, good news, this same high street building society has introduced a 95% mortgage for first-time buyers, something that's worth investigating yourself. This building society is making it clear they're committed to providing a range of options, not just for the young or middle-aged, but also for those entering or already in their retirement. This is just the first step towards a wider range of choices for those looking to borrow later in life. So, what does all this mean for you? If you're nearing retirement and thinking about mortgages, there's more good news out there. The market is adapting to meet your needs, and if you're younger, this is a heads up about the evolving landscape of home ownership. Either way, keeping informed helps you make smarter decisions. Shop around to find out what mortgage options are available in your location. But remember, while it's great to have more options, always consider your own financial stability and long-term plans. Borrowing later in life can be a fantastic tool, but like any financial decision, it needs careful consideration. That's it for today. Give a thumbs up if you found this overview helpful, and don't forget to subscribe for more insights into how the financial world is changing and what it means for you. Thanks for watching, and see you in the next video.